Hello, I'm Arsenault, and I lead the team that produces our quarterly newsletter, Market Point. As interest rates broke out to the highest levels in over a decade in the third quarter, stock and bond prices declined. The main catalyst for the rise in interest rates was a clear message from the Federal Reserve that its work was far from over. Despite raising rates multiple times over the last 18 months, the Fed remains concerned about ongoing inflationary pressures in the economy. Inflation may still be a concern for the Fed, but over time, we fully expect the Fed to be successful in bringing inflation down. Unfortunately, if history is any guide, a recession may be the only solution to successfully bring inflation down. And here is why. There have been 13 rate hiking cycles going all the way back to the 1950s. A recession occurred in 10 of the 13 cycles. In each and every one of these 10 cycles, the Fed was battling high and sticky inflation, just like it is today. In the 3 tightening cycles not associated with a recession, inflation wasn't that high to start with. So in our opinion, the global economy remains in the late cycle phase and recession risk remain elevated. As a result, we continue to recommend an underweight position in stocks versus bonds. Within equities, we favor domestic equities versus international or emerging market stocks. We also prefer defensive equity sectors versus cyclical ones. Quality, profitability, and larger capitalizations are also equity factors we favor in the current environment. Within bonds, the focus continues to be on higher quality bonds over riskier credit, while we are also taking advantage of rising yields to slowly add to duration. Longer duration in bond portfolios should provide higher potential returns and also greater diversification benefits in what we believe to be an increasingly challenging macro environment going forward. Thank you for listening, and I certainly hope you enjoy reading our newsletter, Market Point. You can also click the link in this email for a more complete review of our thoughts and insights. For additional articles, newsletters, and more, make sure to follow us on Facebook, LinkedIn, and TrustPointinc.com. Thank you.